I guess I should have known by the way you parked your car sideways that it wouldn't last. If you know the lyrics, or if you know the song that those lyrics came from, you're probably pretty cool. I was looking at Wally World here, Walmart, at the Walmart, currently at 137.30, 137.31.30. Do we hear 29? I'm looking to get in on 100 shares of the Walmart. Let's just go ahead and buy it. Let's go ahead and buy the Walmart. So that's $13,730 invested in a company that should not have too much trouble. Could have saved two more dollars right there, Bart, if you would have just waited. Well, I wanted to move on with this with you and I, because it really, a couple bucks doesn't matter over the long term for this trade, because I think it's going to work out very favorably for us. So if we consider Walmart, and the reason that today I was high on the Walmart, not literally high on the Walmart, I wasn't huffing any of the uh, spray paint that they sell in the hardware department there, but I was looking at Walmart from a dividend perspective because Thursday, today's Tuesday, Tuesday the 14th, on Thursday the 16th, Walmart goes ex dividend. Okay, so that's their ex dividend date, March 16th. So we need to be on the record books, right? So that when we're recorded, that company will then cut us that check on April 3rd, right? So, and that check's going to be 57 cents. 57 cents, that's it. You just coughed up $13,000. You're crazy. Well, it's 57 cents per share. We bought 100 shares, so that's going to be $57. And it's, again, $57 we didn't have before investing in Walmart. It's a low yield. Okay. Their dividend yield is only 1.66%. Okay. But their dividend growth is 49 years. Hello. So they're knocking on being a dividend king's door because they need 50 years for that. So they're right there knocking on it. So you can see their dividend yield grade is a D, but the growth is an A and the consistency is an A plus. So if you look at these grades, that was kind of my math grade. Here was my gym grade, and then here was probably science, and then study hall. Of course, I aced study hall. So what I wanted to look at though was, could we turn this into a higher yield using covered calls? So the 1.66% yield, how that is determined is basically what is the dividend, right, per year. So right there is $2.28. $2.28. And then we divide that by the share price. And what we just, it was 137.30 that we just paid. So that's where we get the 1.66% right there, 1.66% dividend yield. So it's the yearly dividend payout divided by the price per share. That determines the yield. So in this scenario, they're still going to pay the $2.28 at this moment, regardless of what the market does. So if the market goes down and the stock goes lower, then this yield automatically becomes higher. But if we look at Walmart's history, we will see. So here we are in Seeking Alpha. I've clicked on the dividend tab. The first thing that comes up is dividend scorecard. And then if we go over to dividend history, then we see that what those quarterly payments have been. All right. So as you can see, they have already determined that they're going to pay a 57 cents per quarter dividend all year long. And when we go back into history, you're going to notice a trend here. But this also gives us the advantage of now we know all of the ex-dividend dates for the entire year. So we can collect the next four dividends in one fell swoop if we sell a covered call at a later date than this 12/7. Now that doesn't mean along the way, depending on the strike price that we choose, it doesn't mean that we won't have or cannot have those calls or those shares called away early, because we can. Because on my end of it, I am obligating myself to sell the 100 shares at a specific expiration date on my end and at a specific share price, which is called the strike price. But the buyer of that contract, they can take my shares anytime they want. So that is an interesting twist between buying and selling the option contracts. But on our end of it, selling it, you receive a credit, buying it, you pay a debit. So that's why when we go to sell a call, if we do indeed do that now, then we will put money in our pocket today. So if we look at this dividend history on these quarterly payments, so all of 2023, they're going to pay 57 cents a quarter. Last year was 56, 55, 54, 53, 52, 51. So you see the pattern there, which is very nice because it's dependable. It's dependable on two regards. One, that they pay a dividend each and every quarter. Two, that they grow the dividend every year. So Walmart is going to give you a raise each and every year, and you don't even have to stand at the front and give carts out. Welcome to Walmart. How would you like a cart? You don't even have to do that to get a raise from Walmart. Now, can we make that raise even bigger? Well, what do you even mean? They just told you what they're going to pay. It's 57 cents a quarter per share. How would you give yourself a raise? Well, we would do that with the call options, selling a covered call on the 100 shares we just bought. Now, the reason, of course, we bought the 100 shares, we've gone over that before. One option contract represents 100 shares. So if we go to trade Walmart options and then we click on sell call, right? Because that's what we're looking to do. If we sold one out just 3 days from now, so 3 days expiration at $1.38 a share, we could collect $62 today, and we're locked in on that $57 dividend. Plus, we paid $137.30, right? So we paid $137.30. So we would collect 70 cents per share profit from the 137 to the 138. So that's $70 bills, right? $70. We would collect $57 dividend locked in on, and then also a $62 premium. So if we add those three things together, we would have $70 on the share appreciation plus $57 on the dividend plus $62 bills on, or hey, now it's up to 63. Check it out. We'll still go with the 62 just for fun and games. So we'd have $189 that would be profit right now, and then we would divide that by what we paid, right? 13,000. So we divide by $13,730, and then we're at 1.3%. Hey, that's not high at all. No, it isn't high at all, but it would only be for a 3-day trade. But I thought, hey, what if we built, so over time, I've been building my castle of love. So to protect our castle of love, what if we built a financial moat around it? Okay, so we dug out the moat, we filled it with water, and then we put in the most protective alligators that we could find. That would be our financial moat. Now, one of the ways I think would be a foundational aspect of building that financial moat would be with companies that you can have forever, own them forever, like Coke and Pepsi and Chevron and Walmart, all those types of companies. Deer. I was looking at deer, a doe, a female deer. Oh, why do I still remember that from like first grade? I was looking at deer. I'm looking at, let's look, here's an article on Sleeping Alpha called something like Sleep at Night, Dividend Stocks. So look, oh, hey, there you don't even come up with your own ideas, do you? You just take them off the internet. So there's Walmart at the top as far as a, what was the name of this article? Sleep at Night stocks for those hedging or risk averse. Well, I thought, I'm not hedging or risk averse, but I do like the thought of building a financial moat that is impenetrable over time. So if you build that with a cash flowing asset like a dividend paying stock, then at some point it really doesn't matter what goes on with the share price because they're paying you, and we can be selling covered calls, so we can be doubling down on the income that grows over time, okay? Because here is a dividend growth CAGR over this period was 19.1%. So from 1981 to 2022, they have grown compounded, the compounded return. What am I looking at? Like compounded annual growth return over time, 13 or 19.1%. So that's pretty solid. That's a company that is going to be doing just fine even in the recession. So is McDonald's, so is Walgreens, so is Target, so is Johnson & Johnson, so is Pepsi. So I'm going to be going through each and every one of these. In fact, I was looking at Coca-Cola, but we'll save that for another video. I was looking at all of these and then many, excuse me, many others to build and prepare the foundation for that financial moat that is going to be constructed around my castle of love. And to do so, I want companies that I don't really have to worry about. You know, they call it SWAN, sweep. You really should edit these. just the real version. SWAN, sleep well at night. Those are the dividend stocks that will be making up the majority of that foundation for the financial moat. So if we go back to the Walmart, right? I don't need to make a short-term Wheel of Fortune trade on the Walmart, even though this still qualifies for a Wheel of Fortune trade, because we're looking for 3 elements of income. 1 is the dividend, 2 is the premium, and then 3 is the upside potential on the share appreciation. So if we're selling a call above what we paid, you know, that's locking in a future profit. Whether that happens or not is yet to be seen. You know, the market will decide what goes on with that. But if we look out, instead of 3 days out, what if we go, let's just look out. Let's look at Walmart again, go to the history. The next dividend payment would be in May. Now, again, these shares could be called away prior to that date. But if we tried to lock 2 dividends in a row, so the one coming up in 2 days, as far as the ex-dividend date is concerned, and then if we tried to lock the next one in as well, you know, so just right on top of it, and we didn't even look too crazy as far as going out just 1 strike. What if we go out 2 strikes, have nearly an 80% chance of those calls? It's more like probably a 70%, just over a 70% chance. Now this is saying a 78% chance of profit, which I believe that, but it also shows a 29 delta, which, you know, I like to equate to percentage as well. So right around 29% chance that these shares would be called away at $145 on or before this date. Okay, so it could be called away before you catch that next dividend, or not called away at all, depending on what the market does. So I'm confident to choose this type of strike at 145, collect $186, and then potentially the 2 rounds of dividends. So that would give us what type of return? If we looked at the numbers just real quick, try to do it quick this time. So we would collect 2 rounds of dividends. So that'd be 57 times 2. That's 114. 186 on the premium, right? But then our appreciation would be much better. So we would be from 145. Okay, so we would sell at 145 if they're called away at that number, and then we paid 137.30. So it'd be $7.70 per share, and it's 100 shares. So it'd be 770. I'm confusing myself. Well, my brain is actually working faster than my mouth, which is very rare. So we would gain $770 in share price appreciation, okay? We would also then collect 114 in dividends, provided that we do make it through the next dividend date before the shares are called away, okay? And then we would also have the $186, which is right now, it's at 25, but we had the 186 on record, so 1,070 is what we'd have in our pocket now between now and May 19th. So just over 2 months at 66 days. So what would that math be as far as a percentage of return? So we would take the $1,070 profit, and then we would divide that by, yep, you guessed it, by what we invested, which is $13,730. So that would be 7.8% return in just over 2 months. Okay, so that is a play that is very, very interesting to me. It's very interesting, isn't it? Because we can lock that in now. So, 2 to 3 parts of that is almost guaranteed with Walmart. Now, there's no telling that we're not going to appreciate in price between now at 137.28 and May 19th at 145. I mean, there's no guarantees of that, but that's actually would even be preferred, that they weren't called away. And then we would just sell another call at that time and go out another month or 2 or 3, depending on the premium. So what do you think? Should we go for it? It's back up to 186. What do you say, Bart? Do you want to try to lock it in? Let's do it. Let's just try to lock it in and see if, well, maybe we can get 187. Oh, there you go again, the $1. I bet we'll get that dollar right. Well, $187 right now. Covered call, 100 shares. That's one contract. And there it is. So there's $187 with the potential of locking in another $770 in share price appreciation and $114 in dividends. But what we are going to be doing, I'm sure of it, is we're going to be collecting that first dividend and certainly the 187 that we just put in our pocket. So there is the, I call this the cash and carry. Get a name for everything. Crazy as a kook. So the old cash and carry is simply, let's see if we can't cash flow this thing and carry it as long as we can, because we don't necessarily want those shares called away. In fact, we would prefer not to, whereas some of the other Wheel of Fortune trades, we wouldn't mind if they were called away. And then we could just reevaluate. Is that still the company we want to go with, or do we want to work with a different company? But Walmart is a company I do want to work with long term. So that's what we're going to do. So that's what we have on the board. Yes. So thanks for tuning in. Make sure you are indeed a subscriber. Click on the like button, even the notification bell. Leave me a lovable comment, and I'll see you in the next video.